Good day, context traders. Today is September 2nd, 2025, and I wanted to go over the market with you all today. My three absolute favorite trades all appeared today. So I want to go through each of them with you, go through a little bit of detail on what you should be looking for in the future. All right, starting with first, I love the narrow state explosion trades. That also could be the return to narrow state trade. But let's start with the narrow state explosion. Here I have loaded for you my 2-minute chart, and you can see that we closed last week into this narrow state and exploded out of it. Now, if you were able to take that swing from Friday into this trade, or if you were able to do some after hours trading, if you're trading in the NASDAQ futures, you may have been able to catch this beautiful explosion down here. If you're just trading the QQQ options, then likely you didn't catch this trade. But this does lead into the next one, okay? So those of you who've seen my videos before know that I love big gap days. Big gap days, oftentimes we get the gap and then the snap. So the gap and snap looks very much like this. We take off from this narrow state, we explode out from a close of 570.30 area, and it opens clear down here at 561.30. 561.30 up to 570.30. That is a monster move down. So if you were someone who took this swing and you opened up down here, how are we feeling? Are we happy? Are we feeling pleasure? Are we feeling pain? We're probably running a high, and boy, right out of the gate, it just keeps running down, running down, running down. We're feeling really good about ourselves. We're up $10 on this trade. Probably want to take a little bit of profit, right? We're probably going to do some profit taking in here. You might hold some runners to see if you get a retrace and a continuation. But once this thing starts to snap and reverse, if you are in an options contract and you start losing and you start seeing that matrix start losing all that green, the anxiety starts to settle in. You're like, I'm going to take my money and I'm going to run. And so that's what I'm looking for. I'm looking for that snap opportunity. Now let's blow this thing up a little bit. I'm on the 2-minute chart here. Let's look back the previous day. I've already got this drawn out. What might we be looking for? So I had this macro here, came down, came over, came down again, exploded out. So here's a zone that we might stop in, or we have this bottom zone that we might stop in. So I had my eyes ready here. And in full and honest disclosure, I did get in here in that 561 area and added on to it down in here. So I had full faith in this trade snapping. Some traders may be fearful they're catching the falling knife. And frankly, I just assumed it was going to bounce out of this zone. I didn't know how far. I had my target in mind. I thought where it could go, but I absolutely could be wrong, and I was willing to take that bet. So I actually scaled into this with 4 entries, and I'll go over that with you here in just a moment. But these are those target areas that I was looking for. Okay, so let's go back to our 2-minute chart. So as this thing opened and drops, I hit this multiple times in here, catching this wave back out. Now, I'm expecting that once this starts to get some momentum, that we should get a 1, 2, 3. We should get an explosion, a correction, or a flat retrace and an explosion at minimum coming from those demand zones. I'm expecting there to be a pretty good move back up into the moving averages. We are so inefficient here. This is such a far move away from the moving averages. We need to have a retrace for this to continue. So what is my target zone? My target zone was going to be roughly 50 to 60%, the golden fib area for the extended move. Now, if you took just this first explosion out and got out, that's fine. There was definitely a chance that this could retrace, come back down, maybe bounce back off of the opening 2 or 5 minute range, and then try to continue up. Or if we had a heavy selling pressure, this thing could have tanked. I was feeling pretty confident that this was going to at least try to get back to that 50% range. So let's look at what that looks like. Look at that. We come up, we have a C retrace style. We have that churn up, churn up, churn up, boom, explodes up, wick, wick. So my first trades, I was in down here, scaling in, dollar cost averaged in around 560. And I did scale out a little bit here on this impulse and pullback. So this was in that 563 area. So I took some off with that $3 move. And then I held the rest. And when we pushed up into this area, 2, 4, 6 minutes, couldn't breach, I got out. So just shy of 565, close to a $5 move on the 1, 2, 3 explosion. So that was my target. I had mentioned this to a couple of other traders in the community that that was a target, so they can validate if I'm on that one that that was the area I was looking for. And then I was at this point started shifting my focus to look more to puts and the type of trade that I'm looking for here. So we call this first one the gap and snap. So gap, snap back. And then the next thing I'm looking for is what I like to call the 50-50 trade. All right. The 50-50 trade is just a simple concept of looking for 50% retracements and then a 50% move in the other direction. All right. So let me show you this real quick and then we'll look at the chart. So a 50-50 trade. Trying to set this up for what today looks like. We have a strong move down. I just put one solid bar here. It doesn't have to be one bar. It's typically going to be a multi-leg move that's kind of directional, going in a direction for a while. But because we had this monster snap down day, this was one just huge solid bar. Remember, let's pretend that this is just one big bar. Boom, one big solid bar, that whole gap down. Okay. So this is our one big bar down. I'm looking for it to retrace into that golden fib area, that 50 to maybe 60%. Now, don't get dogmatic about this. It could be 47%. It could be 46%. It's just something in that general area. We're looking for somewhere around the midpoint, a little below it, a little above it. But generally speaking, that golden fib just above 50% is where I'm looking. And then once we get that retrace, so we have the down, we have the impulse up, good strong impulse up, takes out 50% of that bar. If it fails, I'm looking for the next bar down to take out at least 50% of the up leg. Okay. Leg one down, leg two up. I'm looking for now 50% of this bar to be taken out. This is where I'm anticipating that we're either going to get some support, bounce, 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 and then it's going to crack through and try to take out the low of day, or it's going to bounce, 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 and then it's going to continue back up. So that would be our 1, retrace 2, 3 out. I'm expecting that this area or this area is where the likely reversal will be if it's going to happen. There's no guarantee that a reversal will happen. This thing could just pull back. We had the 50% retrace, it holds, and then boom, it could just continue lower and lower and lower. I don't know. I'm just playing the probabilities and I'm looking for those reversal patterns or those continuation patterns at these key areas. But what I can tell you is this move to this move is extremely likely to happen. Now, it's not always going to happen, but it's likely to make that attempt. And once this thing gets in motion, we can very safely set our trade break even or plus a few ticks, whatever it is that you like to do. And it's a pretty low risk trade. It's not always going to work, as I said. And if you try to hold always to get the low a day, oftentimes it will bounce from there. So let's see what we had happen today. So what do we say again? We shot down out of that narrow state. We pulled back to that 50% area. So we pulled back to that 50% area, and I'm looking for now down. We came back. This is the green bar up 50%. Now I'm looking for 50% of the green leg to be taken out. So go up. So you want to go to the wick, that's fine. If you want to go to structure, it's fine as well. Again, this is not precision. This is not pinpoint accurate, but it is amazing how often it is very accurate. So if I wanted to go down to this area where that collection was, we can do that. Or we could go to the high. Let's just go to the high. There was a nice impulse there. So let's see what we got. So I'm looking for somewhere in this area or somewhere in this area. So 50%, boom, pull back. If this wants to take off from there, that's where we could get that leaning back chair double bottom look. All right, it could do something like this. And then boom, take off. Or we could have the continuation lower. We just have to watch the price bars and let the market tell us what it wants to do. So I got into this trade here, and unfortunately, it didn't work out. All right, they don't always work. I got in this trade. I was looking for the return here, and it still had some strength in it, and it came back out and took me out. Little almost break even. I made a few dollars on this. As it's got into motion, and if I'm being fully honest, I was being a bit greedy here. I had this beautiful $5 leg out. I was looking to set some monster numbers for the day. And so this did move from around 564.90 down to 563 and a half. That was a beautiful move. That's a normal dollar plus move. Could have taken that, but I held when we started to extend in and this one snapped back up, took me out for a little bit of a gain. So we come back up, we start to fail again. This time we're successful, right? So we get back into that same area. We see all those wicks. Boom, leg down. Look where it hits. Right into our first target zone. We have a reaction. We bounce, drops lower, right in that target zone. Start to pop again. So I did not hold all the way for the low of day. Um, I saw this one come down. I held through this one. It dropped and it was bouncing right off of this opening 2 minute area and started to come back up, and I exited my trade there. Um, I could have held some runners to look for that lower extension, but I was nice and green for the day, so I just took the base hit. But for this trade, this base hit, we're in around 564.75, and we're out right here at 561.50. It's another just beautiful trade here. Just playing the statistics. This is 50%. It went a little bit below 50%, started to pull back. I thought this potentially could get back into this range and then take off. It did drop a little bit lower. It's great. If somebody held all the way here, this is a very probable target. If it gets through that 50% level, it can definitely come down and try to sweep the external liquidity below that low of day. It came right back into that zone, bounced from there. And then what did we get? We started to get my third favorite trade, that is the expansion and contraction of the 21,200. So we had the contraction, boom, we exploded out. And then we start to see the scoop and score where we start to come back up and the 21 starts feeding back to that 200. And so we get up here. I did not take this trade. I was away from my computer at the time. Um, I did get filled on a limit order that I had placed, um, and was nicely in profit. when I came back. So it was right in here where I got filled. Um, so I was a little bit lucky, came back and it was setting up. So I actually actively added in to this trade right in here. So I had a small position that I'd put on when I left my computer. It filled, I added into the position here, and then we start to see this move all the way back up. Got right back into just below where all this failure happened, and I exited this trade right there on this crash bar back into the pen on the 2-minute chart. Um, and it did start to flag out. And then what do we get? Explosion. We start to get into another narrow state and boom, it blows out the other side. And if anyone watched post market, this thing just kept ripping. Let's go ahead and turn that on actually. So we just took off and boom, exploded clear up into post. All the way up into that 568 area again. So beautiful, beautiful trading today. Very easy to get chopped around today if you didn't know what you're looking for. So if you didn't have a great trading day, it's just something to take notice of, bank these things. One thing I always recommend, if there's super volatility, you don't need to take position sizes as big to make your money. So if you're getting into a situation where you're having big movements, volatile bars, it's better to get into the motion of the market in the right direction, even if you're a little bit late, give yourself a little bit more room on those stops, and just size down. There's no need to size up if you are not an experienced trader. If you're an experienced trader and you want to capitalize on a day like this, by all means, like this is where you shove all those chips in and you make it one of your top 10 days of the year. But if you are not super experienced, you can still make really good money with smaller position sizes. Take half or a third of your normal position. Okay. So, real quick, let's review these. Take these notes, go back, study your charts. The first one, we have the narrow state, 21,200 narrow state. Usually, when price gets squeezed one way or the other, we see a big explosion. All right, so we saw that big explosion in the overnight tradings through the Asian and London sessions, and um, a lot of this happened in the futures market when the U.S. stock market was closed on Labor Day. But we see this explosion down. We open. We're hitting a previous area of support. We've gapped so far away from the moving averages. We're super inefficient. We're very likely to find somewhere in here to snap and come back somewhere 40, 50, 60% of the move, that's a monster move, right? We don't need it to come all the way back up. We can catch a dollar plus move very quickly in a counter directional situation when we have that type of gap move. Then the next trade I call the 50-50 trade. We're looking for 50% pullback, and then I'm looking for 50% continuation in the dominant energy direction. And then we play it bar by bar. So I'm looking for a 50% move in that dominant direction of energy. So the dominant energy was down. We see the 50% pullback. I'm looking for it to go half of the pullback leg back in that same direction. It's not always going to work, but it very frequently will come back into that zone. It'll decide there if it's going to have a little reaction and then dump lower, or if it's going to reverse and go back up. It did have a little reaction and it dumped lower, came back, low of day. And then we have that nice big macro double bottom. We get up, we get that scoop and score look where the 21 starts rising on a nice 45-degree angle and just sends price right back into the 200 on the 2-minute chart. So beautiful, beautiful trades today. I hope you were profitable today. I hope you banked on some of these. If not, study these, get ready, put these into your arsenal for the next time these events happen. Until then, everyone, please, if you got value from this, hit that subscribe button, hit that like button, be ready for the next video. Drop it in the chat. Tell me what you learned and what you're going to be looking for next time. Until then, everyone, happy trading.